Today, we're going to talk about just what is a whole life policy. Obviously, it is the cornerstone or the chassis of an IBC policy. And, as a whole life policy, it's the very best asset to use for infinite banking concept. There are lots of benefits, and I mean, it puts the infinite in infinite banking. It has a very long history. Life insurance, generally speaking, goes back for centuries. Originally, it actually goes back to Roman times when they had an ancient pooling system of resources for providing burial expenses for the families of those that lost. It grew over the centuries, of course, in uh, as the 1700s in England, the clergymen and the church had these available for the clergymen when they passed on, so to provide for the widows and their children. So, and in the 1800s, it developed into companies providing this life insurance for families, offering guaranteed payouts and building cash value or equity in that policy over time. So it is a social and economic contract. Okay. Life insurance policies are contracts, and these are private contracts that are unilateral. And as long as you make your premium payments, they guarantee a death benefit, right? Very simple. And because they are private, they are also creditor proof and exempt from, your credit rating and finances generally. So as a contract, again, they're also very strong with guarantees. The first being obviously the death benefit for a certain pre-calculated base premium that will buy you a certain death benefit in the beginning. And that base premium, by the way, with the traditional whole life policies or permanent policies, is fixed. It is never going to increase or change, over time. As everything else goes up in price, your base premiums on your life insurance policy does not until it's fully paid up. Okay. Also, there's a period certain during which those premiums are expected to be paid or need to be paid by the contract, whether it's up through age as short as 10 years, all the way, to 120, age 120. And all those in between, age 65, age 75 for 25 years, 30 years. And that will, of course, adjust and affect the premiums paid. So it is not to be confused with the term, life insurance. We understand term is duration fixed as far as the protection. It's kind of like renting that death benefit protection. With whole life, it is permanent and is guaranteed as long as you're paying your premiums until it's done paid, being paid for. You have that guaranteed, unless, of course, you never die, which so far hasn't happened to anyone I know. It is not, and it also is not the index universal or IUL or VUL policies that you may have heard of that invest in the stock market and speculate. In that sense, the whole life policies are just simple, strong guarantees. If there's three words to describe them, that's it. Actually, a fourth would be that they're tax advantaged. When they're set up right, these whole life policies, remember, because the industry and this instrument financially has been around so long, they actually predate the IRS, the Social Security Administration, and all those fun things that the government has, kind of set in place. But these policies, as long as we remain within certain rules and limits, they grow from the first year to the last tax free, and all that death benefit, even well beyond what you may have paid in the cost basis, will flow tax free to your loved ones for the most part. Anyways, that's the lowdown on a whole life policy. Hope you learned something today, and talk to you soon.